Good morning. It's Super Bowl Sunday, February 5th, 2017. My name's Jim Whitley, and we're just doing a little weekend review and look ahead. We're going to take a look at a bunch of names here, but I do promise to keep this brief as usual. But maybe we'll get a little bit more insight as to what the signals are. Let's start off with the major indexes. We can see the only thing that's in neutral right now would be the small caps, the IWM, but we do have weekly buy signals. The daily stuff is just kind of neutralized at the moment. Let's break that down just a hair. We can see that the strength here in the MACD, I mean, this is one part of my indicator, this red line that keeps coming. I mean, it crosses here, and when that crosses, you get some upside, and we're continuing with that. So that's why the MACD is part of my signal. If you're looking for a price, it's way up here at the top right-hand corner, and it's just looking strong right now in that for a weekly view. In the daily on that, the 22-day holds, and the price is heading back towards the highs. I mean, things are kind of neutralized on a daily, on the daily, but I mean, things all in all look pretty decent. The Dow is pretty much the same on the daily. We can see that that's just a slightly more sluggish. The Qs have been hugging that 5-week moving average, especially the last 4 weeks. I mean, it's come to touch that moving average and just keeps going higher. The RSI has got an uptick here, a little bit above 60 now, and we're seeing some strength down here with that MACD. Over on the daily, that appears to be resolving that spotty look that we had with an upward bias. IWM, the small caps, as we noted, seems like it's kind of flattening out here a bit. The week did end strong. I mean, it was a little bit under last week's intra-week high. Breaking that down to the daily, we can, we see that it's still a, kind of lower highs here, but Friday was it was a strong day, and we're still in that 134 to 138 range. I have done pretty decent with it, buying it, down here at the bottom of the range and riding it up, and buying it again at the bottom of the range and riding it up. This time, because we see this stepping down, I did put a little bit on the short side. But hey, MACD is still strong on the hourly too. I mean, if it wants to go higher, it's going to have to clear this around 137.50 and hold it. And I have no problem, flipping around the other way on it again too. But it is out of the index. Out of the indexes, it has the weakest signals that I have. Moving over to the next section that I have blocked off here would be bonds and real estate. We can see that we on the daily we just started flashing a sell signal again on the TLT. That's a 20-year. Let's take a look at that. Obviously, the weekly stuff has been in that downtrend. We got a little blip up here, which kind of neutralized things. But it looks like it's going to continue. Looking at the daily on that, the neutral has kind of gone to a little bit sluggish view. The range has been ticking up here. However, this 22 bar is sloping down again, and we did close underneath that 22 bar range. Over on the daily with the IEF, the 7 to 10 year, closed just under that 22 day as well, with things fairly neutral. Real estate, IYR, it's trying to get back to that upper side of the range. The best way to look at that here is over on the, where my trade was, over on the hourly chart. We had this descending trend line, and what did we do? We just gapped it. I mean, why not? Just go ahead and gap it. So we got here to the Fibonacci. We're up over here, and we held that 77.40 level. I had to go and flip my short to long on that. So we're going to kind of see what happens. I think actually I hopped in the VNQ on my long, just because if I'm wrong, it's sometimes a little bit more forgiving. The next section that we break down to is going to be more like developed markets and emerging markets, and then taking a quick look at oil and gold. We're still seeing some strength in the MACD on the weekly of the developed market stuff. It looks like this range is going to try to break here. We're going to keep an eye on that because on the daily, this 22-day was tested and it has recovered that. It's also now recovered the 5-day moving average, which has started to turn around and tick up. The emerging markets is hugging that 5-week moving average higher. It looks like it may cross here. It's just a kind of a tiny cross, but here's our top of the range. It's still trending higher, so I mean, we're going to see what happens there. I don't have any of that, but we're keeping an eye on it. Oil, it feels higher. I mean, all the averages have moved into alignment. It's kind of testing around this Fibonacci area. That's just another horizontal line that I use. A lot of times with moving averages, it's all fine and dandy when you're on a moving average, but you can see how it does like to look for horizontal levels close to that average or whatever. On the hourly on oil, I mean, things are stepping up here a little bit. We may get a little bit more action in that tomorrow. We'll see. Gold is trying to turn the ship around, maybe. I don't know. Here we're getting a little positive cross on this weekly, and on the daily, we're trying to break from that range. So, I mean, it's a little odd to see, the equities moving higher, and then gold is also trying to step up here a little bit. So it's just interesting to note. Moving on to some of the sectors, we'll look at biotech, which has been looking better. Interesting when we get to energy with the XLE, it's actually starting to flash a sell signal. But here we go. Biotech had a strong week here, and on the daily it ended with a bullish hammer. So we'll see if we can get up towards the top or at least up to this top end of the range here. Home builders, it's just kind of tightening up, moving averages and everything else, and that's pretty much the same with the materials. We're looking for an upward move here. We'll see if we get it. And here's the energy that we were talking about. On the weekly, we still getting this. I mean, what looked like it was a bull flag, now it's just kind of, it's still coming down. It's slightly crossing negative here. On the daily, the 22 bar is still sloping downward. We have some weakness in the MACD. Moving on to you know, financials on down to staples. The only thing that has a weekly buy signal would be technology, but financials had another strong week after the announcement that we had. We may just go ahead and push higher on those. Industrials took a little break last week. Not too concerned about them yet. They're still above that 11-week moving average. Did manage to close above the 22-day. With technology, I mean, it continues to ride that, you know, 5-week moving average higher. Got some strength happening down here, and it closed above the 5-day, which is rejoining now the rest of the upward trend in the moving averages. And notably, it is a little flat here with the MACD. Consumer staples, it did break above that moving average cluster on the weekly. We're up here at Fibonacci at 53, showing some strength. I do think it's possible for us to still run up to that 55 level. I did go ahead and take the rest of my position for now, because I mean, I had it down here at the 51.40 level and kind of saw it come up here one time, and now it's up here 2 times. It's a kind of a double top on the short on the short side of things. I mean, but if we do come over, I mean, it is more of a third test. So I mean, it could break out and go higher back to that 55. I don't have a problem hopping back in it if we can get above this 53 and hold it. And in the final section, we see that the healthcare, you know, along with biotech, is flashing a buy signal right now in consumer discretionary. Also with the weekly on a buy, retail has still been a little sluggish. Let's break it down. Utilities are tightening. It's looking a little bit better in the MACD. On the daily, we have a range of 47.85 to 49.22. Healthcare, like we said, had a strong week with a positive cross. On the daily with healthcare, it looks like we're certainly heading back to that 72 level with that kind of strength in the MACD. Consumer discretionary, all the moving averages continue to hold that uptrend. And over on the daily, the 22-day is around 84.16 right now. Might be worth a little shot there. Retail has been tested. I mean, it's still kind of weak. It doesn't mean it won't go higher, but I'm not touching it at the moment. I mean, well, we'll see what happens down here. The 41 level is key. So thanks for spending a little time with me here this morning. We're going to look forward to the Super Bowl. You can connect with me on Twitter and Facebook at Whitley Trading. Emails can be sent to jimwhitleytrading@gmail.com. And you all have a fantastic conclusion to your weekend, and we'll catch up with you here in the beginning of the week.